Good afternoon, ladies and gentlemen. Welcome to a Standard Bank webinar hosted by SBFC, Standard Bank Financial Consultancy. My name is Ketwe Kunene and I'm the coordinator. And today's topic, we are talking post-election because we just voted, remember, and we're looking at the economic overview after the elections, which will be done mostly by Kevin Lings and assisted by Mr. Errol Mayer. But before I tell you about these two gentlemen, some housekeeping rules and how this works in case this is your first time. What will happen is for the next 40 to 45 minutes, perhaps 50 minutes, you'll be sitting in listening to these interesting gentlemen tell you about the economic overview. If you have any questions that you think of during the webinar, what you do is on the panel on your right-hand side of the screen, you will see a heading that says questions. Open that up and you can type up your question anytime during the webinar. And what we'll do is at the end of the webinar, so that we don't disturb the flow of the gentlemen, we address your question and we give you the answer to that. Second thing that I want to make sure that we are all on board with is sound. At the bottom of your screen, the taskbar, you look at that volume signal. If you click that and make that at the highest point so that you can hear us clearly, that will be a good thing. And then I just want to get an indication that you can all hear me clearly before we start the presentation. So what I need you to do is on the very same panel where the questions bar is, there's a small high five. If you can click that, that will indicate to me that your sound is good, you can hear me, and then I can carry on with the presentation. So if the majority of those small high fives come up, then I know we're good to go and we can carry on. All right. Thank you, Alicia. Thank you, Alta. I see high fives. Ashlyn. Thank you, Bongi, Bradley, Brian. All right. So the high fives are indicating that you can all hear us and we are good to go. Okay. So let me start the introductions of the two gentlemen that are going to be taking us through the presentation. First one is our resident jock, Mr. Errol Mayer. He's a certified financial planner and an admitted advocate of the High Court SA. He holds qualifications in finance, law, teaching, and taxation. He's very interesting, very qualified, but I won't tell you too much about him. Most of you know about him. Currently, he holds a position of advisory propositions legal specialist here at Standard Bank. He's going to start us off, and then he's going to hand over to Mr. Kevin Lings. Now, Mr. Kevin Lings has been employed since 2001 as a chief economist at Stanlib in Johannesburg. Over the past 10 years, the scope of his economic research has broadened to include the G3 economies as well as members of BRICS. His research is largely used to inform Stanlib's asset management investment process, and he embraces the philosophy that everything should be made as simple as possible, but not simpler. While at Stanlib, Kevin has managed an asset allocation unit trust fund for 5 years, winning the Micropulse Best in Sector Award. Before joining Stanlib, Kevin was employed as an economist with JP Chase and also worked as an economist within the Nedco Group for 10 years. His initial role within Nedco was an industrial economist. This provided an essential base of knowledge on the South African and regional economy before starting to focus more heavily on analyzing the financial markets. He completed his undergraduate and postgraduate degrees in economics from the University of Witwatersrand, which is WITS, specializing in public sector finance and international trade. Now, although the missing piece is Kevin's first book on the South African economy, he has published a number of journal articles, both domestically and internationally. And just a side note, besides a passion for economics, Kevin is a keen photographer and an avid horologist, and he's launched his own watch brand in 2012. So this is an interesting man, Mr. Lings, but he'll be taking over from Errol. So for now, I'm going to head over to Mr. Errol Mayer. Mr. Errol Mayer, good morning.
Good there we go.
Good day.
Thank you, Katiwe. Well, thank you. Good day, all attendees, and welcome to our post-election webinar. The one question that's on everyone's lips: what now, South Africa? What does the future hold for us? I bet that is the question that many of you are asking yourselves right now. Our youth that will shape our future are discouraged, unemployed, and appear not to take elections seriously. These are serious challenges. But on a different note, I know, appreciate, and accept that it's human nature to want to know as much as possible about the future. Often, I wonder why we have this innate need to know what will happen in the future. Is it part of being human and just our instinct to safeguard our survival, or perhaps just another attempt to formulate a strategy that beats the odds? Well, I'm sure you all have a valid explanation, but let us focus on what it is that we do know. I once read about a person that simplified the question of uncertainty. He said that if you can imagine two circles, the one represents what matters to you, and the other circle represents what you can control. Where the two circles overlap, you focus on. Stated differently, we should focus on what matters to us and what we can control. Now, this is true in financial planning when we save for our goals and plan our future for our own unique journey through life. But it's always important to understand why these things are happening. Shocking to hear that the Rand weakened to almost 50 Rand a dollar this morning. But what does this mean? In this webinar, you will hear Kevin talk straight about factual issues. This will help us to understand and control our sometimes irrational behavior, but I guess that is just part of being human. So Kevin, once again, thank you very much for joining us, and the floor is yours.
Thanks, Errol. Morning, afternoon, everyone. It is afternoon. Yeah, it's afternoon. So what we're going to focus on today is really more about South Africa and where are we after the election? What are we still waiting for from government? Obviously, the cabinet announcement is critical. We were hoping that the cabinet announcement would already have been made. Clearly, it's been delayed, partly, I think, related to Pravin, partly related to David Mabuza. I think that there's a chance it could be announced this afternoon. We know that SABC has been put on standby to broadcast sometime between 4 o'clock and 6 o'clock this afternoon. That doesn't mean it definitely happens. They get put on standby a lot of times and nothing happens. But there is a possibility that we get an announcement later this afternoon. And obviously, that announcement is going to be quite critical for a whole range of reasons, one of which for us is who makes up the financial and economic cluster, who is running in particular the economic development, trade and industry, finance, who's in charge of public enterprises. Is Pravin still in the cabinet? Does the president simply put him in the office of the presidency until the issues around his stand-in has been cleared up? So there are a number of key issues, and obviously international investors are asking us a lot about that. I'm going to get on to South Africa and chat around all of this a bit later. Before I go into that, though, I just want to focus on one aspect of the global economic environment, which is probably the most crucial to us, and that is global trade and the trade wars. Now, if you've been following us, we've been talking about the trade wars for some time. This was initiated by President Trump, who feels and still feels that the United States gets a bad trade deal with most countries. And to be fair, he's probably right. The trade deals have historically favored other countries, not the United States, and that was done on purpose. It was done to try and help other countries like China and, quite frankly, like South Africa, prosper. South Africa has a very favorable trade deal with the United States. Of course, we don't utilize it, but if we wanted to, we could access the US market much more easily than many other countries. So this was done on purpose to help smaller countries. And at the time, China was, relatively speaking, quite small. Obviously, China now is the world's second biggest economy. They're highly competitive, yet they still get a preferential trade deal. And President Trump ultimately wants to revise that. I don't think there's anything wrong with that. What is wrong with it is the way in which he's gone about this. It's been very antagonistic. It's been quite bullying in the nature. It hasn't been consultative, and it's led to adverse reactions around the world and a drop-off in confidence. So why is this important? It's important because over time, the world has become a lot more integrated. We refer to this as globalization, and if you go back over the last, let's say, 3-4 decades, global trade has become much more important for the world economy, and today it represents just over 30% of world GDP. Now that is enormous. Therefore, if there's any disruption to global trade, it implies that 30% of the world economy is directly impacted, and then it has other indirect consequences for many countries. And right now what we're seeing is a fall off in global trade. So if you look at the rate of growth in trade for the last, let's say, 3 or 4 months, it's clearly turned negative, and it's entirely feasible that in 1 or 2 months' time we'll be talking about a recession in global trade. Now that's crucial because it's effectively a recession in 30% of the world economy. And clearly what that's doing is it's dampening down world growth. We've seen global growth estimates being revised lower by everybody who looks at the data. We're seeing confidence levels fall off. And importantly for us, we are seeing China struggle a little bit. Now, China's growth rate, being the second biggest economy in the world, is obviously crucial. They've relied quite heavily on exports in the past, but if you look at the chart on their export growth, in total it's gone negative, and it's clearly been under pressure for the last 3 or 4 months. And in particular, their exports to the United States has turned severely negative. At the moment, it's declining by around about 13 to 15%. And if you think not that long ago, they were growing their exports to the United States by 13 to 15%. So a massive turnaround in China's ability to export to the US, and also a turnaround in China's overall export performance. And because they're the world's second biggest economy, it's clearly dampening down world growth. And what you see is that world industrial production is now softening. So world trade is slowing, and world manufacturing on the back of the slowdown in global trade is also weakening. That's bad news for South Africa, because clearly we like to sell commodities. We're still a big commodity exporter, and in order to sell our commodities, we need manufacturing to be fairly vibrant around the world, particularly in the United States, and right now it's slowing. So there's a concern about this as it's impacting many parts of the world. I'm just showing you a chart on industrial production in Europe that's also turned negative, and it's telling you that this problem is not just confined to China and their slowdown in exports. There's a sharp slowdown in European exports and European manufacturing. And there's starting to also emerge a slowdown in US manufacturing. For the first time in a long while, it's gone negative. So they are also being negatively impacted by their own trade restrictions. Now, we focus on this a lot because it has an effect on South Africa's ability to grow. And that's really where our discussion is about today. And we're looking for what are the opportunities for South Africa to become more prosperous. Last year, we grew this economy at 0.8%. That's obviously way too low. We need to grow this economy on a sustainable basis well above 3%, and ideally try and get to the 4% level. Obviously, that's going to take time. So in the interim, we're saying, what are the opportunities to grow South Africa, let's say, back up to 2%? And can we achieve that 2% within the next year? That's kind of the interim target. And obviously, you would look for that to happen in a post-election environment. So where are the opportunities to grow that? And right now, if you look at our exports, particularly if you look at them in dollars, they're declining for the last 3 or 4 months. And it's no surprise that our exports are declining, because that's linked to global growth, global trade, China, Europe, the United States. So what it's telling us, the message that we're getting, is that because of the global backdrop, we can't expect to export our way to success at the moment. We can't rely on global growth to lift South Africa. We can't rely on commodities, on mining activity. All of that is fairly problematic. And so it's emphasizing the importance of South Africa sorting out its domestic economic issues and trying to help itself to lift the growth rate. We're not going to be bailed out by global growth. Now, that's both positive and negative. The positive is that it forces us to reflect internally and to try and get rid of the bottlenecks domestically. It's negative because obviously it makes the challenge of lifting our growth rate so much more difficult. But that's the circumstance that the president finds himself in. Obviously, the election itself, I thought, went well. I thought the outcome was pretty much as you would have expected. I'm not convinced there were a huge number of surprises. You can maybe pick some of the smaller parties that gained and lost and kind of focus on that. But the overall outcome would have been pretty much what you would have anticipated. And it does put Cyril and the ANC in a strong position to try and effect a political revival. And I do think that South Africa has embarked on what we call a political revival. It's not just the election. It's not just the election of the ANC and Cyril and his ability to appoint a new cabinet. It's also got to do with the changes that have been made in key institutions. So if you think about all the changes, management changes at Eskom, Transnet, and a whole range of other institutions. If you think about the Zondo Commission and the Commission to look at the PIC, etc., there are a number of key inquiries into what's gone wrong in South Africa. That has the makings of a political revival. If you think about the changes in the National Prosecuting Authority, not just the boss, but a number of other staff changes that are systematically coming about. If you think about the appointment of the new commissioner to run the South African Revenue Service, that's a key appointment. And as you go through the list, you realize that these institutions are systematically being revived. And we're going to soon have a new cabinet. I think the cabinet will be smaller than it's been previously. I think it will be a better cabinet in the sense that I think it will be focused on how do we get growth and jobs, etc. going. I think it will instill more confidence in the business sector. So I'm optimistic about that. So all of this is telling us that there is a political revival underway. That is being bought into by many foreign investors that we talk to. Many people internationally have a huge amount of respect for Cyril and what he's able to achieve, and they have a lot of hope and expectation that the political revival can continue. What we don't have in South Africa right now is an economic revival. And you can say that it's important to first get the political revival before you have the economic revival. I think that's fair comment. But having a political revival doesn't guarantee an economic revival. You've got to work at it, and you've got to eliminate some of the bottlenecks and some of the obstacles. And I think that is going to become the key challenge. In other words, once the cabinet's announced, once that's settled down and we know who we're dealing with, I think very quickly the media attention, the investor attention will shift to, so how do we grow this economy and what do we need to do? And in particular, can we get 2% growth generated within 12 months? So what is the challenge? The main challenge for South Africa is unemployment. If you said to me, what is South Africa's most important economic problem? There would be lots of things on the list. You'd have no problem filling up a list of economic problems or economic challenges. But what would I put at the top of my list? I would put the unemployment rate, and in particular, the unemployment rate of the youth. That is the future of South Africa, and that represents the single biggest risk to this country, and that is that the youth are disenfranchised, feel they're not part of the system, and at some point that spills over into broader social unrest. It's something that we just cannot ignore. So when you look at the unemployment, the number of people unemployed now is just over 6 million. That's pretty much at an all-time record high. Unfortunately, the 6 million unemployed ignores a significant number of people who are classified as discouraged workers. Those are people who don't have a job, they want a job, but they've simply stopped looking for work. And in South Africa, as soon as you stop looking for work, you're no longer classified as unemployed. Yet those people want a job and they don't have a job. So you can legitimately say, let's add those people back. How many people in South Africa are discouraged? And the total is now just on 3 million people, which is obviously the highest it's ever been. So you can legitimately say that in South Africa there are approximately 9 million people, just over 9 million people that are actually unemployed, who want a job. Some of them, yes, have stopped looking for work because they are simply discouraged. If you then use that number, the unemployment rate in South Africa is 38%, which is incredibly high by historical standards and by international standards. Most countries around the world are only comfortable if their unemployment rate is below 10%. South Africa sits at 38%. Now, when we delve into the unemployment rate, where is the biggest challenge? It's very much amongst the youth. So when you strip out from just the youth and say what percentage of our youth are unemployed, that's 55% at the moment, which again is incredibly high by any standard. But that 55% ignores the number of youth that have become discouraged. You add those people back, and youth unemployment is actually 69%. And within a period of less than a year, that will go to 70%, even if South Africa is able to lift the growth rate a little bit more. Now, the question has to be, what happens in a society when 70% of your youth are unemployed? That's South Africa's major challenge. And that effectively is the major political challenge and social challenge that the country faces. And I would put that at the top of my agenda if I was in the office of the presidency, because ultimately that will feed over into politics. When you look at the election, one of the statistics that stands out very stark from this election was that only 42% of all adults in this country voted. In other words, we look at the turnout rate and we say, yes, the turnout rate was a little bit lower, it could have been better. But that turnout rate ignores the fact that a huge number of people simply don't register as voters. So you can take the number of people that actually voted as a percentage of the total adult population, the number of people who could register and vote. And as I say, that percentage is 42%. That means that more than 50% of all adults in this country never bothered to either register or vote. Why is that? And there must be an element of discouragement that's gone on here, either because you don't know who to vote for, or because you simply don't think that it's going to make a difference. That is not a healthy environment, and I don't think it represents the type of democracy South Africa was really aiming for. So how do we create these jobs? Now, every time I talk about unemployment, obviously the focus quickly shifts to education. And there's a legitimate argument to say that the better the education system, the better the education outcome, the better the employment will be. And that link is very strong, and internationally it's incredibly strong. But here's the point. Having a good education is not a guarantee of employment. So to illustrate that point, look at youth unemployment and say to yourself, what percentage of people who have a degree in the youth category are unemployed? So let's say that you've gone past matric, you're now at university, you've got your degree, and you're looking for a job. That unemployment rate currently is 31%. So even if you have a degree, your unemployment rate is 31%. It doesn't guarantee you a job. Obviously, if you don't have a matric, you've dropped out of school, then your unemployment rate for those groups of people is significantly higher. So there's no doubt that you improve your employment prospects if you get more educated. That holds up everywhere in the world, but it doesn't say to us that it's a guarantee that you'll get a job. So what is it that's holding back the overall employment environment? And it's very simple. We just don't grow the economy fast enough. And in particular, what we're not doing is growing investment, particularly private sector investment. And that has to be the focus. Now, when we look at consumers, what do we find happening in South Africa at the moment? The confidence levels amongst households not particularly good, and you would understand that given the weak economic environment, the high unemployment rate. The latest confidence number came out this morning at 10 o'clock, and that's for the second quarter of the year, and it was slightly better. But it's not at a level that you would say, oh, consumers are confident. They're far from it. What is important to note, I think, is that that survey of confidence was done before the election. So we don't know how people are feeling after the election, but typically what happens is when we look at the historical elections, confidence tends to rise in South Africa immediately following elections, which tells you that people are full of hope. People are hopeful that this election elected the right people who will make a difference. And I don't think that that will change. In other words, I think that there's a better mood at the moment in South Africa. There's a mood of improved optimism. And so it's up to the government to utilize that better mood to try and get the economy going. When you look at consumers and their position, they're clearly struggling. Consumer income has slowed. It hasn't gone negative, but households are finding that in the last year, their income is not as buoyant as it used to be. And that's got a lot to do with the fact that unemployment is a problem and that salaries are slowing. If you look at the average salary increase in the private sector, it's now closer to around 5%. Government is slightly higher than that, but the average for the country has definitely slowed. On top of that, we know that bonus payments have dwindled. We know that overtime pay has been cut. Key sectors like construction have really been hurt. And so the net result is consumer income has moderated meaningfully. So it's telling us that the consumer's not in a position to really lift this economy. The consumer can't, even if they're a little bit happier, even if they're more confident, they can't go out and start to spend because they don't have the income to support that spending. We also know that consumers, unfortunately, are going to face a number of price pressures. And we've got to be mindful of this, particularly when we're talking to retired individuals, because the data shows us that the inflation rate experienced by retired people is on average 2% higher than the inflation rate for the average in the country. And that's because of the way in which retired people spend their money. So have a look at water inflation. At the moment, that sits at around 11%. It's very difficult for people to avoid spending money on water. And so I think water inflation will stay at this type of level, and clearly it eats into that little disposable income. Look at where electricity inflation is going. It's going to rise to 13%. The latest increase that NERSA gave Eskom is still not in effect. It only comes into effect in a couple of months, but it's going to push electricity inflation up to 13%. Again, very difficult to avoid. If we look at petrol inflation, it's currently at 11%. So take those three categories, petrol, electricity, and inflation. Those numbers are all double digit and difficult to not spend money on. As a result, many individuals find that they're having to devote a lot more of their income to paying for those three categories of spending. So what keeps our overall inflation rate reasonably low? It's got a lot to do with things like motor vehicles. If you go buy a new vehicle inflation is currently around 2% in South Africa. And so it helps to keep the overall or the average inflation low. The reality is you don't buy a new vehicle every month, so you just don't experience that 2%. What you experience and what you feel is obviously electricity, water, and petrol every month, and you know those prices are fairly high. The thing that has helped us a little bit is food inflation. Food inflation sits at the moment at 2.3%. So that has been better than in recent years. But we've just got to be careful that at the moment our agricultural season is under pressure. I was looking this morning at maize production. It's expected to be around about 12% lower this year than last year. Most of the summer crops are under pressure, and that may push up prices. So we are just warning that, yes, inflation looks okay for the moment, but it's going to continue to drift higher. And given that consumer income is struggling, consumer confidence is slightly better, but not all that thrilling, the consumer or the household is taking strain. Now, what they're doing in response to that, and I think it's unfortunate, is they are indulging in some credit, particularly what we call personal loans. So if you look at the chart on the growth in personal loans, that has moved up to over 12% from a very low 1 or 2% a year ago. And that increase in consumers taking on personal loans reflects the distress that the consumer's under. And obviously, if that continues on, at some point, we could start to see that reflect in increased bad debts and other negative effects. But it's coming about because consumers are struggling to make their monthly commitments. So what the data shows us is, yes, consumers are feeling slightly better. I think their confidence level can hold up, but I don't think they're in a position to drive this economy and to get the economy to grow at 2%. So we're not going to have exports, we're not going to have consumers. So where else do we look for growth? We could look at government. The problem I think government has, and the Minister of Finance highlighted that in the budget, and the data since then has highlighted that, the government is now highly indebted. We know that. The credit rating continues to come down. We're still at risk of losing our investment grade credit rating from Moody's. So the answer is government can't simply go into the new administration and start to spend a lot of money. There isn't the money available. Our government debt level is over 50%, heading to 60%. That debt in the chart I'm showing you obviously excludes the debt by Eskom, it excludes the debt by Transnet, Sanrail, Denel, SABC, the South African Airways. There's a whole range of other debt levels that are excluded from this. So government, unfortunately, has to try and be more disciplined on an ongoing basis and be much more careful in how they manage their finances. That's why it's critical that the Minister of Finance is experienced, has a lot of confidence in him, has a good team around him, because he's going to have to manage this as best as possible so that we avoid the downgrade. It's also telling us that the other cabinet posts within government that are focused on the economy are going to all equally be under enormous pressure, because what you're going to be trying to do is you're going to be trying to lift the growth rate in South Africa, but by not spending money. And that's incredibly challenging. It means it's got to come from policy, building confidence, cleaning up and delivering better infrastructure. That is a bigger challenge than simply growing an economy by spending money. The other thing which we need to focus on is the debt levels and the difficulties within Eskom. Now, we know that Eskom now needs a new boss, effectively. Clearly, that's proving quite challenging to find the person who, A, would be willing to do the job, and B, has the necessary skills to do the job. And I would argue that the appointment of the head of Eskom is probably more important than the cabinet positions right now. It is that critical. Eskom's finances, we know, have continued to deteriorate. The electricity production appears to have stabilized, but we can't get comfortable with that, because we know that we are still utilizing the gas turbines, which are very expensive. And in the background, we need to find a longer-term solution to our electricity needs. Eskom later in this year is going to need additional funds. Now, Moody's recently did something I think is very important, and that is they put out a statement indicating that they are essentially going to regard all of Eskom's debt as being part of government debt. Now, why that's important is that government's not going to be in a position to say, oh, don't speak to us about Eskom, that's Eskom's problem. Speak to Eskom about their problems, which has tended to be the stance that government has taken when directly confronted with Eskom. Instead, now, what Moody's is going to say is that Eskom's debt and government debt are essentially the same thing. Therefore, government can't point to Eskom as a separate institution and say they need to sort this out. This is as much government's problem as it is Eskom's problem. So any further widening of Eskom's debt levels or any additional funding is going to be seen in that light by Moody's, and therefore it represents the single biggest risk that our credit rating is ultimately downgraded by Moody's. So when you look at it, Cyril is inheriting a huge number of challenges. He's got an economy that's barely growing at 1%. We know in the first quarter of this year, the economy probably declined. He's got fragile confidence. He's got high youth unemployment and a high unemployment rate overall. These are not easy challenges, and therefore he needs the best cabinet possible around him that focuses less on the politics and focuses more on how we generate an economic revival. Having got the makings of a political revival, the task now is the economic revival. He is, however, sitting on a major advantage, and this is an advantage I'm going to keep repeating because it's South Africa's single biggest asset. And many countries around the world, I would highlight Turkey in particular, find themselves in economic difficulty, find themselves in political difficulty, and they would love to have this asset, and that is the strength of the South African corporate balance sheet. We've highlighted it many times before. We've updated the data. The corporate deposits are at 800 billion. They're at a record high. I don't see this as a negative. I see it as a positive. It's telling me that South African corporates are still in good shape. They haven't left the country. They're waiting for a better environment. Yes, they're lacking confidence, but what they're looking for, the message coming back from South African business is start to focus on the economy, start to reduce the bottlenecks, start to get policy certainty. And we've become more hopeful that Cyril, with a proper cabinet who we think will be appointed, will be able to systematically deliver exactly that. In other words, while the underlying performance of this economy appears fairly bleak at the moment, we are actually raising our degree of optimism that South Africa can move into better shape, because I think the understanding is now clear within government and the new government administration that you've got to turn the political revival into an economic revival, and I think the president is up to that challenge, and I suspect his cabinet will be up to that challenge. Adding to that, obviously, you've got to lift confidence. Now, the confidence within the business community, we know, we've highlighted it many times, is incredibly low, and it's been trending lower. But I just want to make this point, and that is that the Reserve Bank did a study on how important is business confidence to the growth of this country. And what they concluded is quite stark. They said that for every 1% increase in business confidence, fixed investment spending in this country would increase by 0.5%. Now that is phenomenal. In other words, if you could just take the business confidence index that I've got on the chart now, and you could take that level from where it is now up to the black line, which is 50 index points, which is average. If you could just lift the business confidence from below average to average, this economy would grow at 2%. That's the findings of the Reserve Bank. That is not even saying that business confidence has to get above average. It just has to be at a kind of average level, and that average is not especially demanding given that confidence has been depressed for a long period of time. It makes that bigger difference. And I think that's where the focus is going to emerge once we know what the cabinet is. Obviously, the level of investment by companies has dwindled while the confidence has been fairly weak. That is understandable. Essentially, business is saying, I don't see opportunities. I don't see the economy growing, and I'm simply unwilling to commit this balance sheet, this cash I've got in the bank. I'm unwilling to commit it to new projects, new investment, new employment. Yes, on the face of it, that's negative. But when you ask business about this, what they're indicating is that they've had to bolster their balance sheet. They've had to keep it as strong as possible, given that the economy is quite weak. And they are more than willing to start to expand this balance sheet if you're given the right policy environment and the right political environment. And to me, that's the key to unlocking South Africa's growth. The risk is very clear. The risk is, and I'm using an article that appeared in the Business Day on the 21st of May, so fairly recently. You won't be able to read the article. That's not the point. I'll tell you what the article says. But it's essentially talking about Barlow's, and Barlow World seeks growth opportunities in Mongolia. Now, what it's saying is that Barlow World is looking to take 8 billion rand out of South Africa, out of their war chest, which they call it, and invest it in Mongolia. And to me, that's the danger if we delay the economic revival in this country. In other words, when you look at the corporate balance sheet and you look at how much money is available and the relatively low level of debt, that's not going to remain in place forever. At some point, South African corporates will say, well, I've got to grow my business. I've got to look for opportunities. And if those opportunities are in Mongolia, then I'm going to take 8 billion and invest it in Mongolia. Now, I've never been to Mongolia, and I find it hard to believe that there are better opportunities on Mongolia than South Africa, but essentially that's what it's suggesting. And so we don't have time on our sides. We've got to urgently lift confidence, and we've got to urgently get the economy going. So when you looked at this importance of business confidence, a 1% increase leads to 0.5%. You in fixed investment, you get the confidence back up to the neutral level. South Africa grows at 2%. I think that is entirely feasible within the next year. In fact, I would forecast that that is what's likely to happen. And I do think that once we drill down into the cabinet and once we hear the state of the nation from the president and we understand what the initiatives are, I think the confidence levels will grow, and that a 2% growth outcome will become more likely next year than what we find ourselves at the moment. So that's more or less all I'm going to ramble on about. What we'll do now is have a look and see if there are any questions. So I'm just going to look and see with the help of our IT wizard for questions.
Hardly IT wizard. Let's see. Thank you, Jens. That was very nice. Oh, okay, there are some questions. Let me get that closer for you.
Okay, so we've got a question. Why did the dollar-euro versus the rand forex rate remain stable before and after the election, but now it's been hit by every cabinet shuffle? What is the outlook for 2019? So at the moment, yes, the rand is under significant pressure. That pressure has come about in the last 2 days. It's difficult to isolate all the factors that are impacting the currency. There's no doubt that the delay in the announcement of the cabinet probably contributed to this. The uncertainty around both Pravin and David Mabuza probably added to this, because you're telling the international community that you're not 100% clear on the composition of this cabinet and how you're going to move forward. That uncertainty obviously contributes to rand weakness. At the same time, the international community would know that Eskom needs another CEO, and that we haven't appointed the boss of Eskom, and that would also add to a lot of uncertainty. And then in the background, there's quite a big rebalancing of some big global investment indices that are affecting emerging markets, and that also would have contributed. So there are a number of factors, but I think it's fair to say that the uncertainty around the cabinet appointments would have added to this. We're saying that once this has settled down, once we know what the cabinet looks like, we will, I think, gain confidence that we're going to be in better shape from a policy perspective. We think there will quickly start to emerge some initiatives to lift the growth rate. It's entirely feasible under those circumstances that the rand strengthens and that it regains a lot of the ground it's lost, certainly in the last couple of days. I think that's entirely possible. That doesn't mean that the rand will now strengthen over a significant period of time. The reason is that the global environment is more challenging. The trade wars are negatively impacting emerging markets like South Africa, and therefore the undertone globally is not all that helpful. So my view would be cautiously optimistic that the rand can strengthen in the short term, which is 3 to 6 months. Beyond that, though, I do think the currency will come under some pressure. The rand, you would say, is undervalued. It's weaker than it ought to be. The fair value would probably be around 13 rand 70 or thereabouts at the moment. So perhaps there's some scope for some currency strength, but I don't know that that strength is going to become that significant or that sustained.
I'll take the next one while you look for the others. The one that I'm going to read next is from Lindsay, where she's asking, hi Ketue, thanks for the webinar. Thank you to the gents. Will the copies of the slides after the presentation be available? Yes, the webinar is recorded and it will be posted on our YouTube channel for our customers, for the internal staff. It's on the SharePoint portal that we have. You will get a thank you note soon enough. They will give you the URL address for where you can get the copy.
Okay, we've got a quick question on from Yako on youth. What is the cutoff age for youth? That is anybody younger than 25 in South Africa, and obviously you've got to be of working age. So anybody of working age younger than 25 would then fall into the category. In South Africa, that actually amounts to a huge number of people because the average age in this country is 24. So unfortunately, the number of people, if you take away the percentage, the number of people that are unemployed and are in the youth category amounts to a couple of million people. We've also got a question around the agenda for around Pravin. I'm not quite sure what that question is aiming at, but the problem I think is that Pravin is critical to the stability and the transition of the public enterprise or the SOEs. He spent a lot of time trying to understand the complexity and problems within Eskom and other entities. He clearly does understand some of those issues. A lot of work has been put in place to try and improve those institutions. It's not ideal if you now replace the cabinet member responsible at this stage. You would want a degree of continuity. Why people are wanting him out, I mean, that becomes much more of a political debate, I think. And obviously it's hard for us to comment on what the public protector had to say. But I don't know that that's all that helpful for our ability to resolve the SOEs. I'm hoping that he certainly stays in the cabinet and is able to continue to work for a while longer. He's gone well past any sort of retirement age. He's put in a huge effort. I think his family would want him to step away. But I think he's been a loyal servant of the country, and I hope he continues on for a little while longer. We've got another question. You did not touch on housing, and in particular the relative difference between, say, the impact of housing starts on the US growth and in South Africa. Could this be an area of growth as well? Absolutely. We have put forward a number of suggestions on how to grow this economy that goes beyond simply saying lift confidence. We've said where could we see some growth, and obviously things like tourism would be a key objective, and housing is part of that. And in any country, if you look at the successful countries around the world, part of their success has definitely been attributed to the development of housing. South Africa has a massive housing shortage at the moment. Unfortunately, banks have been reluctant to finance housing. At the moment, mortgage advances are growing at around about 3%, which is well below what it ought to be. Clearly, that relates partly to affordability, partly to confidence. I think South Africa desperately needs to find a better way to fund housing, especially for those people who earn too much money to qualify for an RDP house, but probably earn too little for the banks to be all that excited about funding them. I think we need a different vehicle to find a way to fund that, and I think it would have enormous benefits for this country, because when you develop housing, most of the raw materials are sourced domestically, the labor sourced domestically, the skills are domestic. There are a lot of benefits across a range of sectors. So we would certainly be advocating for a better development of our housing market. You showed a 31% unemployment rate for graduates. Do you have a view whether the areas of study of these graduates is what the economy needs? I suspect most are not. Okay. Yes, so it's a problem in terms of mismatching of skills. So when we look at the breakdown of that, in South Africa, we have a lot of graduates in areas of skill that the economy is not desperate for, and probably has an oversupply. And then we have a lack of skill in graduates that the country is short of. So there is a mismatching of graduate skills, and there's a mismatching of all skills. We don't, I think, provide enough guidance to households and families as to what sort of skills there would be job opportunities and what sort of skills people should be considering. We know in South Africa that engineering skills are in short supply, medical skills, IT skills. There are a number of areas where we have a distinct short supply, but we're still not at the point where our universities' outcomes are reflecting those skill shortages appropriately. We have another question. Do you think the expropriation of land without compensation policy would be a big decider? Hold on, I'm scrolling down, which obviously I'm struggling to do. Do you think, okay, the question reads, do you think the expropriation of land without compensation policy would be a big decider in local and foreign investment? Yes, it is a critical issue. It gets a lot of international coverage. Obviously, it gets a lot of local coverage. I think we're going to have expropriation without compensation. That's not the issue. The issue is in what form does it take? What is the nature of this? How is it executed? And what is the discussion around that execution? I must say that as I've delved into this over a number of months, I've become less concerned about it. It remains an area of risk and an area of potential volatility, but I think that Cyril and his team are getting better advice on land and have reasonable ideas on how to go about this that would prove to be less disruptive. So at this stage, I'm not especially concerned about it, but clearly it has that risk and we'll monitor it carefully. Why does Cyril not allow industry and independent suppliers to supplement the electricity supply, reducing the burden on Eskom, which will give Eskom some time to reinvent the institution? That's a good point. There are a number of initiatives to try and diversify our electricity supply. We know that Cape Town has launched their own initiative, and we'll see whether that's successful. We also know that in reality, many households and businesses are in the process and have tried to diversify their domestic supply. I think it would be a healthy outcome for this country because it would give consumers a better choice, and it would probably, on balance, reduce the cost. Clearly, government would be concerned about what that means for Eskom and their ability to remain viable. But I think with the right thought, we can find a compromise between those two issues, and Eskom could probably continue to exist, perhaps in a slightly different format. And that's partly what the unbundling of Eskom is trying to achieve. So remember, Eskom, while you could scale back its electricity generation, its electricity transmission and distribution remains critical. And so there are many aspects to electricity supply that go beyond merely the power station. And I think that in a different format, Eskom could play an even bigger role in South Africa of helping independent power producers distribute electricity. So we're hopeful that there's a bit more of a positive development on that side. How does the unsuccessful Brexit agreement to date affect our economy? Its effect is indirect. Brexit is an indirect effect. Obviously, South Africa does a lot of business with the UK, but we haven't necessarily seen a direct effect of our trade with the UK. The UK economy has slowed. It barely grows at 1%. So I guess to that extent, it's hurt us. Where it hurts us in a more significant capacity is that it's adding to the concerns around global trade, around globalization, around the rise of nationalism and populism. And what it's doing is it's starting to undermine confidence around the world. That together with the trade wars. Brexit on its own, I think, wouldn't have that significant effect. But remember, Brexit is happening at the same time that we have a spike escalation in the global trade wars, and it's the combination of that which is proving unhelpful. So what it does is it dampens sentiment towards emerging markets. It dampens our ability to export. It makes people hesitant to invest in trade-related business activity. So I think it's already had some damaging effect, and it doesn't appear as if Brexit is about to be solved. The UK needs to get a new prime minister. That person then needs to look at what the options are. So at best, you're looking much later in this year before you even have a resolution to Brexit. Very unfortunate, and I think it will continue to dampen global trade. We've got a question. What would be the most important economic advice you would give the country's president? That advice would be around confidence. It's very difficult to expect households and business to start to spend money, start to invest, start to employ when confidence levels are low. That's a very common thing. It happens around the world. If you look at every successful country in the world, you'll find that their citizens are reasonably confident. So what would be crucial is for government to sit down and have a hard look at why is it that people in general, business and individuals, why is it that they're lacking confidence? And what is it that I can do to systematically lift that confidence level? And I think if government could make progress, they would be surprised at the general uplift. Government can't control and manage every aspect of this economy, nor should they try. The financial resources are not capable of doing that. You don't want to live in an environment where the state and the government controls everything. The job for government is really to create an environment in which private business can prosper. And right now we don't have that environment, and a lot of it is linked to confidence. So that relinks to policy certainty, it relinks to regulation, it links to the prosecution of corrupt individuals. All of that would send a strong message that we are serious about running this country properly, we're serious about growing the economy, we want to see employment. I think if government focused on those issues, we would see a significant turnaround.
I think we've got time for one more question, Kevin, if you can find one, and then we can close off.
Question, why did you have such a quick response to David Mabuza from the ANC's Ethics Committee? Is he really cleared? I don't know. Can you clear an individual of a whole range of charges in 3 days? It seems that you have that ethics committee hasn't really delved into it. Have a look at the Zondo Commission and how much detail they're going through in all of these. It says to me that what's more at play here is politics than really trying to get to the bottom of any allegation. So it's all part of South African politics.
Thank you so much, Kevin. Thank you so much, Errol. That was very interesting. At least we've got a bigger light, a better light post-election economic overview, and that we appreciate. I hope the audience also got what they needed from that. There was a lot of questions, which is good, which means people were paying attention. We like that. Ladies and gentlemen, thank you very much. If you'd like to talk financial planning with an advisor or a planner, please head into any Standard Bank branch. There should be one there for you. If not, you can SMS the word guide to the number 31791, or you can send an email to our call center. We'll get an advisor to call you back. The email address is sbfcvoiceanddigital@standardbank.co.za. That's sbfcvoiceanddigital@standardbank.co.za. That's it for today. We'll see you next month for another interesting topic. Until then, thank you very much. Have a good afternoon and a productive week. Goodbye.